Hi guys, I'm Phil Town for Rule 1 Investing, and I want to talk to you today about the income statement, one of the three critical financial statements, which include the balance sheet and the cash flow and the income statement. The income statement is all about profit and loss. And you've heard the terms top line and bottom line. Hey, bottom line is this, blah, blah, blah. Bottom line, right? That comes from the understanding that there are these two major important lines on an income statement. The top line is your sales, the revenue, kind of the gross income you've got coming in, right? So the big money that you've got when you sell, let's say you got a lemonade stand, it's the dollars you collected. That's the top line. That's the revenue of your company. And then down on the very bottom is net income. Net income is the bottom line. That's what you're making, and that tells you whether you ought to be in business or not. So income statement is the very, very important. In fact, it's the first thing people look at when they're looking to see if a company's any good, is they're going to look at the income statement. And what we look at is this. We look at the growth of the revenue over time, and we look at the growth of the net income over time. Those two numbers are the critical numbers that come off the income statement. So what are we looking at? Well, every year we see how much revenue the company got. And each year you can compare it to the next year, the next year, the next year, and you should see a steady growth of revenue, steady. And you're going to look for what that number is. And when you use our tool set at rule1investing.com, you're going to get that put out for free, right? I mean, it just automatically tells you, here's the growth rate year by year. Now, you also want to know the growth rate of your net income, and you want to see that also year by year. You're going to calculate it year by year. Now, let's say you're Apple Computer and you're growing at 20% a year, 20% a year, 20% a year like that for 10 years. Same thing down here with net income. And what you see is that the revenue line, the top line, is growing at 20% every year like clockwork, and the bottom line is growing at 20% every year like clockwork. And that's what you want to see. Now, what would be a red flag? Well, a red flag would be that revenue is going up like this and net earnings are going down like that. That would be a red flag. We want to see these things growing together, always together. That's what looks like on an income statement when you've got a great company. Now, how important is that for Rule 1 investing? It's really important. We look at that to see what number should I use to determine the growth rate of the company. Now, the number one number we use comes off the balance sheet. That's the equity growth rate. But we want to see if the sales growth rate, revenue, or the net earnings, profit, growth rates are just the same as the book value growth rates. We also want to see if cash coming in from operating activities is growing at that same rate. So when you do this analysis, you're basically looking to see, am I getting the same growth rate across these major important numbers? And when you've got the same growth rate, at least looking out the back window of the car at the history of this company, you get your long-term growth rate for figuring out what's this thing going to be worth. So if you like what you've seen on this, you guys, and you want to do more of this, and subscribe to my channel for more content, and you're going to learn how the best investors in the world figure out the value of businesses and make millions. I'm Phil Town, and it's time to go play.